After a double-digit bounce to start the year for the home builders, JPMorgan hitting the sell button on Toll Brothers. The analysts there downgrading it to an underweight. That's a sell, $32 the price target. We've made it our call of the day. I should also tell you that not that long ago, within the last hour or so, it appears that Ivy Zelman, the very well-known housing analyst, upgraded Toll to a buy. So this is what makes a market, right? You've got a conflicting call on Toll Brothers, plays into housing. Ivy says positive sector call, valuation looks good. JPMorgan says not so much. Yeah, where do we fall on the desk?
Well, this follows last week. Evercore took the entire housing sector down as well. So JPMorgan's following along. This is a call on housing, let's be clear, on both Toll Brothers and Meritage Holdings. They say that they like Taylor Morrison on a valuation basis. And I think basically when you look at the Evercore and the JPMorgan calls, they are basically saying, listen, the easy money has been made. Ivy upgrading it to buy is interesting to me. I'd love to grab that note, and I will, and read through it. But I'm not necessarily sure that I agree that the easy money has been made. I think you did see a trough at some point here in the last 6 to 8 months, and that is what I would be more focused on.
Toll year to date is up 8. It's, okay, great, positive, but it's underperformed every other major home builder. What do we take from that? Anybody have
I think that's probably just noise. I wouldn't say that it's done anything materially worse than the sector overall. And to echo,
make it more attractive though if you are a believer.
Yeah. Well, look,
that maybe the worst is over in housing.
By definition,
that's a reason to get into this particular stock.
By definition, it does. The answer to your question is yes. However, whether you're picking this stock or another home builder, you have to have the macro picture in mind. And I think this is what you're pointing to, Joe. You have to point out that 10-year Treasury yields are 60 basis points below where they were 5-6 months ago. And that matters dramatically to housing affordability. So does the strength of the labor market. You still have decent average hourly growth. We'll see tomorrow what we bring, but still the labor market's strong. Affordability as measured by rates is very good. Yes, and this stock looks like one of the best in the bunch.
So for us, doubling down on we want to be able to tune out the noise of interest rates and all of that. What we do is we don't invest in the home builders, but rather we do invest in Sherwin-Williams and Mohawk, which is a way of playing the strong consumer. And we know that spending on existing homes is actually quite a bit larger than on new homes. So those are two companies where if you want to be in the space, but you don't want the interest rate risk and you don't want the cyclicality, you could look at them.
DHI, Horton, we talked about it, I think, just a week ago, right before Evercore cut them. For unusual, and it's up 16% year to date. It's still pushing higher. It's up almost 3.5%, 4% today. I'd continue to hold that one. As for Toll, I don't own it, but it certainly benefits from these rates.
Just real quick, back to the macro picture. I mean, why do we care about housing at all? Because it's a leading indicator for a recession, right?
And a huge multiplier.
And massive
and a big multiplier. But you can argue that we're closer to the 9th inning of this game than we are to the 1st inning, but there's nothing that says it's only 9 innings.
Yeah.
Right? So just because housing might be under pressure for a little while doesn't mean that we're headed for disaster.
I like John. The Tepper point. Remember, we sat with Tepper at Carnegie Mellon. Asked me what happens sometimes in baseball.
Yeah.
Go to extra innings.
Go to extra innings. I like John's DR Horton trade. I actually like that better than Toll, and Ivy Zelman upgraded DR Horton as well as Toll to buy.